Are you thinking about purchasing a home? If so, great. But before you go in for that pre-approval, let's talk about 8 things that you need to make sure that you do prior to going in for a pre-approval. Number 1, know your credit score. Know exactly what your FICO score is and what's on your report. Ideally, you do not want to have any lates in the last year to 2 years. Credit scores need to be at least a minimum of 580 to 600. The higher the score, the better your interest rate. Number 2, make sure that you avoid overdrafts and NSF fees, okay? Which means that you want to make sure that everything you pay for actually clears your bank account. Number 3, don't buy a car. I know. That Mercedes, it's been winking at you. I need you to hold off. Don't buy that yet. Buy the car after you get the home, because that purchase will go against your debt to income ratio, and it will reduce the amount of home that you can afford and be approved for. Number 4, save your down payment. Now, down payment, I know some people say it has to be 20%. Not true. Your down payment can be as low, depending on your credit score, as 3%, and if it's an FHA, 3.5%. The most important thing is making sure that you not only have your down payment, but you also have, along with the down payment, you need to make sure that you have your closing costs, which typically can be anywhere from 4 up to 6%, just depends, of the purchase price, as well as you want to make sure that you have reserves. Reserves can be anywhere from a month, 2 to 3 months. I personally say if you can have 6 months, that's even better, because if something happens, we need to make sure that you're able to pay your house note and pay your bills. Number 5, make sure that the money is seasoned. Okay? What that means is your money that you're looking to put down and use as far as sourcing, it needs to be in your bank account for at least 60 days. It cannot just all of a sudden appear. No, you cannot use the money under your mattress. You need to put that money in a bank account, and it needs to sit for 2 months. All right, let's talk about number 6. Pay down some of that debt. If you want to be able to get approved for more home, you have to have less debt. Pay it down. And not only that, if you want to increase your credit score, what you want to do is go ahead and get your utilization score at 30% or less. Give you an idea. If you got a credit card for $1,000, you shouldn't be using more than $300 of that available credit. You will see a significant increase in your credit score if you reduce your debt to 30% of your utilization score. All right. Next, stay at your job. This is not the time to decide, oh, I'm going to be an entrepreneur and I want to be 1099, because we're going to need 2 years of you having income before we can use that income. So if you're on your job, the banks like to see stability. Stay on your job. Next, number 8, make sure that you get all your docs in line. We are going to need a copy of your W-2s, your last pay stub, last 30 days of pay stubs, and we'll need bank statements for the last 2 months. Once you complete those 8 steps, you are now ready to be pre-approved. Reach out to me. I'm LaTanya Knox with Nexa Mortgage, and it would be my pleasure to assist you with purchasing your dream home. Look forward to speaking with you very soon.